Welcome to the Terri Talks. I'm your host, Terri Brown, and I'll be talking on Tuesdays with real people about real challenges and solutions in real estate investing.
The benefit of having businesses is that there's also protections. When you have your business structured properly, it protects you from this litigious society that we're dealing with out here. Because if you don't have your assets in the right types of entities, if you don't have your business set up the right way, I know a lot of people who they are very good at what they do, and so they decided they went into business and they were sole proprietors, and there's no way to protect them from somebody trying to sue them because they were sole proprietors. So that means their person and their business was one. And so if anybody ever tried to sue them, their personal assets were just as much at risk as, any assets that the business had. But the beautiful thing about having different business structures and entity setups is that it actually creates a separate entity that's separate from you. And as long as you don't pierce the corporate veil and be doing a whole bunch of foolishness, it protects you from things like lawsuits and stuff like that. And it also creates this separate entity that rides, depending on the structure, that rides along on your taxes, that passes you personal benefit. But we're not going to talk about taxes. I am excited that when we get to the end, just to give y'all like a heads up of what's coming in the next few weeks. I'm really excited about that because it's going to be good.
Cool. So that means you got to stay to the end because you're getting ready to get some more game. But no, that was great. And inside of our collective, we have attorneys, we have tax accountants and to help us again, not just be doing something for the sake of saying I got a business. Like that don't mean nothing if your business ain't profiting now. And it don't mean anything if you can't protect it. And it doesn't mean anything if I already said that, profitable, and you can't protect it. Right. So that was good. Thank you for sharing that. Okay, so now let's move to the next bit BS that we need to address. And we're not going to get into a whole lot of it because this is not the forum to do it. We dive deeper inside of the collective, but here are some things that you need to address and you need to consider, which is business structures and systems, the foundation for a sustainable business. Remember, all of this is for sustainability, Yeah, that is for sustainability. Sharon mentioned this a little bit, but you want to be able to choose the right entity for protection and tax benefits. And we're not attorneys. We're not accountants. Anything that we provide here is just for educational purposes and for things that we've experienced. However, in the collective side, we will have people that are available to assist you in this stuff directly. So don't worry about it if you're in the collective. But you want to be able to choose the right entity again for protection and tax benefits. So LLC versus S Corp versus C Corp. And some LLCs take on the designation of an S Corp. So, there's some things there that is critical to your type of business. And even with real estate, there are varying opinions about, especially properties that you hold and how many should be in an LLC. And, I hear people say, just get a LLC for every property. Just know that you're going to have to pay for accounting of all those LLCs, right? And so if that's what you want to do, because that's what you think you should do, just know that there are requirements that come with however you set that up, but you need to set it up. Because we're not doing, Sharon alluded, she made mention of a phrase today about, piercing the corporate veil. And it all goes in line with, making sure that you're not having, not commingling funds, and you do have an entity in place that is your holding company. So then that way, there's less exposure and liability on some other fronts. So I'll leave that and keep on going. I said I was going to stay on task, and I want to make sure I do that. You want to separate your business and personal finances. Open up a business account, establish credit, and manage expenses properly. Now, again, we'll dive deeper. This is just to wet your whistle. We'll be diving deeper into that inside of the community. But if you're not inside of our community and you're listening to this, it still rings true. You want to make sure, and this credit thing, just go get a credit card. Now, there's some play which we'll teach inside of the community because we're trying to, where you get other family members involved. And I'm going to do a video training on it. So don't worry about it. But you want to be able to leverage credit. You don't want to be beholden to credit. You want to be able to leverage it. All right. Building for wealth, not just for income, right? So in addressing your business systems and structures, you don't want to just be, making an entity decision just so you can be able to get a client and take money in. And that's often what happens. Like people might get a property. Let's say, unfortunately, people die and they inherit a property. And somebody tell them, get it out that name and put it in, your name. And so they rush to just get an LLC sometimes, but it's just to address that circumstantial event versus the long play, right? And so this is a reminder that this is not just for today. Now you can get benefits for today, but you want to design it out where you could get benefits today, tomorrow, and for generations to come. So you want to keep that in mind. You want to structure your business to increase valuation. This is my sweet spot. Because again, it goes back to if you're going to do it, do it. Could you imagine hustling and grinding? Doing all these follow-ups, because, business is a contact sport if you don't build it out properly. And so you got all this follow-up, and if you are a service provider that requires direct, interaction, it could be exhausting. But imagine you do all of that year in, year out, but you didn't structure it properly, that when you expire and you don't get nothing from it. So again, I don't care if you baking cakes. I don't care if you are in real estate investing. I don't care if you're selling lipstick or making the shampoo, or I don't care what it is. You want to structure it properly so that it can get a valuation, because let me tell you what a flex is, which you should be one of your end goals, is to not just, because let's be clear, it's work in this, but you want to generate enough money so that you can then buy a business. Yeah, you might be like, buy a business. Yes. People sell their businesses. Let me put a note. We could have talked for days, but because we want you to join us next Tuesday for another episode of Terri Talks, that's it for today. Talk soon.